afternoon, everyone. I'm Karen Doyle, Operations Director of CTAM Europe. Thank you for joining us for the first webinar of 2025. So I'll start with wishing you all a very belated Happy New Year. We have a lot to discuss on today's virtual discussion with this fabulous duo, Natalie Lethbridge, founder and MD of Atonik Digital, and Guy Bisson, Research Director at Ampere Analysis. So I'm going to talk very quickly. We're only scheduled for 30 minutes, which includes time for questions. So please post your questions by using the Q&A button. As always, the recording of the presentation will be posted on the members-only section of ctameurope.com. If you're not a current member, please email info@ctameurope.com for more details. I will also follow up with an email today or tomorrow with details about our week-long executive management program that we have annually at INSEAD. It's a live in-person program that's for a week in INSEAD in March. And I'll also follow up with details about a program and a event that we are partnering with. It's OTT Question Time Live. It's in 2 weeks in London, and I'll follow up that by email as well. Natalie and Guy have access to the registration list and may follow up details about their own news separately too. So thank you for tuning in. I'm going to rest my voice and I will now hand you over. Thank you. Enjoy.
Great. Thank you, Karen. Good to see you, Natalie.
Yeah, welcome back to the UK, Guy. Great to have you back. Fresh from a stint in LA. And what a start to the year and what an end to the year this year. It's announcing itself to be a busy one for analysts like ourselves. I think, first of all, I have to apologize if I do a little bit of coughing. My introduction to this year has been the dreaded lurgy that's been going around. So apologize to everyone.
Well, as has mine, so that will be all three.
So we'll try. I've got something to drink there in case. So you and I have been talking about this, and there's been lots of forecasting around. And if we just look at the first last 3 weeks in and of itself, which should have been a holiday period, nevertheless, it's been huge amounts of announcements, and not just because of CES. We know We've got the imminent TikTok ban and what that does to the digital ecosystem in the US. And given that TikTok has a very significant share of ad spend, online ad spend in the US, that's social ad spend in the US, that's going to have an impact. Where's that spend going to go? We've got announcement at CES of Amazon diving deeper into content commerce. What on CTV? What's the impact of that? We've got Venu cancelled, and we've got DAZN buying Australian legacy pay TV giant Foxtel. We've got Netflix outpacing BBC One audiences in the UK, and scoring, I think ultimately you could say, a big win with its Christmas live sports events. So live sports hotting up to be a real center of focus for 2025, and so there's a lot happening, and that's just top line, very skimming over the last couple of weeks. I think everybody's talking about this, and our focus is really, well, given, and I hate to say it, that we've seen a few trends go around in this industry, what is really transformational, what is really disruptive in all of this, and navigating that for a lot of people is quite complex. There's so much being thrown at us. So part of our discussion today, I think, is going to be around what we think are really significant changes, disruptions in the industry, and what's going to amplify and accelerate and really impact. At the end of the day, it impacts numbers and viewing, and that's the basis of what makes our industry turn around. So the big one that everyone is focusing on, obviously, Guy, is AI integration. I know you've got a lot of thoughts on that, and you've looked at the numbers on that. Let's talk about AI integration and and its impact on creativity and operations. We've seen Sora launching V2, and we haven't fully seen the consequence of that. And clearly, from an operational perspective, any anyone creating content is looking at AI, anyone distributing content is looking at AI, and most importantly, its ability also to process data and come out with solutions on data that are pretty very, very transformative. So, Guy, what's your thoughts on it? You've come straight from the US, and we've seen a massive shift in tech platforms now looking at AI very closely and driving a lot of their innovations through.
Well, of course, it is big tech driving that forward. I would second the point you made that of all the tech innovations that I've seen over the last 30 years, many have not lived up to expectations, and I think many we knew as soon as they launched would not live up to expectations. AI is not one of those.
Correct. I fundamentally believe that.
Yes, fundamental is the right word. It is fundamentally impactful on every aspect of the creative value chain. While obviously we're still at very early stages, it's very easy to forget we're barely 2 years in since the launch of things like ChatGPT. While we're still at those very early stages, it's already having impact, real world impact. Deals are being done, studios are working with it and doing deals with generative AI companies to help them in their production, to help them in their storyboarding, their visualization, even back as far as the generation of treatments and basics like that, and script treatments. AI is already very useful and impactful. So there is no question that the entire industry will be embracing it to some degree and will need to have the skill set to use it correctly within their everyday work.
So there's a couple of areas that I'm seeing as well. Fundamental basics, the cost of entry to launch a streaming service globally with AI-based dubbing tools that are actually becoming quite effective is a fundamental shift. I'm sure we'll see it have an impact on compression technology and the costs of CDNs. We'll see it have an impact on content creation, obviously, on addressable advertising and all of those issues. So all of those things. So it's going to have a fundamental impact, as you say, across the board. There is the skills issue from it. What does that mean in terms of transformation for the industry from an operational point of view? There's also the challenges of the value chain itself, which is the rights and the IP around the content creation itself, which is a big question mark. We had in the UK the last couple of days, the government paper on recommendations from Matt Clifford on AI, and Section 24, for instance, deals with copyright, but in a very light way. So that also raises the question. There's a big debate happening now between the creative and legal community and the desire to actually build out AI capability in production about the ownership of rights and the ability and what constitutes copyright and how do you maintain that value as part of the creative process and then the on-selling distribution process. So that's what I'm seeing as being some key conversations. In the reskilling part, what is your sense of that from what you've seen of your clients' restructurings and thoughts in that area?
Well, again, we're at the stage where people are only really just beginning to admit that they are integrating and using this, and the very first deals are being done because of those exact issues that you've just mentioned, the copyright issues, the legal status of created material, and the general impact on the wider creative economy and community. And we're well aware that the US, the Hollywood strikes last year, or the year before now, were very much about AI and its potential impact on all sorts of aspects of creation, but more importantly on the way that people are remunerated and the sort of money that they can make from those traditional roles in the creative value chain. So there are from legal to copyright to remuneration to replacement of workers. There are so many questions that we haven't even begun to answer, that are potential bottlenecks in that adoption. But there's no getting away from the fact that it is absolutely fundamental.
I see it much akin to the disruption the internet had in terms of distribution globally, and even beyond that. I really believe that that content creation is going to be fundamentally altered, much like UGC fundamentally altered content creation 20 years ago. So we talk about the creator economy now, but actually the creator economy has been bubbling along for about 20 years. It's just that the tipping point in terms of monetization is now much more visible. I really believe it will be this next iteration of lower barrier to entry and higher quality content. So there's that to think about, and there's where do you add value, where do you build value from that?
Well, that's an interesting point, because when you do make something so easy that almost anyone can do it, actually you often have the opposite effect. You devalue the entire market. You don't increase the value of that sector.
Which is the important point here. So how do you preserve the value, and where is that value going to come from? Which is an open question. That's the big question coming up now.
Yeah, well, one view would be that high quality professional content actually becomes more valuable, whereas it's that user gen social media content that, to succeed in that today is, the barriers are lower, but it still takes a lot of work, a lot of dedication. Removing a lot of those barriers will potentially devalue that market and raise the value of the high-end production sector.
Yes
Now,
and no. I mean, you talk to YouTubers, they're making plenty of money, but they're not just making money on YouTube. The point is audiences are everywhere. So the ability to access audiences and work with those audiences and deliver in a very agile way stories and entertainment is going to really impact that. So the question is the definition of how you create that value and what is the value in this new world that is likely to hit. So I think that's going to be an interesting one to watch. And that also impacts the trading of ad placements and monetization of that content in situ within the viewing experience. That's going to change. At the moment, if you're in YouTube, it doesn't differentiate between premium and non-premium, and Netflix and others are doing a lot to try and change that and create, a marketplace for online CPMs that understands the difference between those two. And maybe that's something that's going to also change. We're going to see, sort of the ability to distinguish that, the engagement levels and the premium value of premium content. Let's see, watch this space. But you're talking about production, and I think there is a fundamental issue in production now that we've seen, which is you were talking about it, actually, this is your thing, the rescaling of production at two levels. One is the impact of COVID and the writer's strike on the supply chain of premium content. And the second is the globalization, local versus global, and the fact that we've seen a huge evolution of non-US or non-English speaking originated content. In fact, what is it? We were talking Netflix now, sources content from across 52 countries. And with AI and the dubbing techniques available, it's so easy now for that content to be made available globally. And people are getting used to storytelling, which is not just in their own local territories. So what's your thoughts on that? I'm quite excited about that personally, but what do you think about that?
Yeah, well, there's several questions in there, of course. The rescaling is more about an adjustment of the industry, driven by the fact that for a decade or so, the driver for growth has been twofold: one, streaming, and two, global. That market is beginning to saturate, and the opportunity for new customers is disappearing, and so a rescaling of content investment is required. So that rescaling is ongoing. There is a overcapacity in the production market because of the so-called peak TV years that needed feeding and had a voracious appetite. We are going through what will be a slightly painful phase, and have been going through that for at least 18 months now, to rescale that industry. The globalization, I agree. The center of the entertainment universe in terms of film and TV production has undoubtedly moved from the US to global markets. However, the US market is orders of magnitude bigger than any other single market still, and will remain so. So let's just cloak that in some reality of value. And I would also add that at the moment, just to have a nod to the professional dubbers and subtitlers, high-end content is not using AI for localization. But I agree, we will get there in the not too distant future. But moving outside the US is also part of that cost readjustment of production. And that's something that AI again will impact. So one of the reasons to move outside the US is one, you want to address your growth opportunities in countries that are beyond the Western markets. And two, it's much cheaper to make content. Yeah, this is going to be one of those sessions.
Yeah. Just whilst you're catching your breath there, I think there's a couple of areas that I'm very excited about. One is obviously tech innovation and its ability to create new content monetization models. And people have heard me speaking about content commerce as an extension of retail media spend, with a big chunk of money growing in the area of retail media spend, with Walmart leading the way with its investment in Vizio and its content studio, with Amazon announcing it is now going to be showing ads on CTV. That morphing of that, the TV and shoppable is really, coming through. And what that does is enable all sorts of monetization opportunities through content in a way that is much more seamless, particularly if it's with aggregated providers who have already the wallet of their subscribers. So I think that's a very interesting development. I also think AI will impact that, but I also think that's really one to watch as we see new business models developing, and I'm hoping that we'll see some experimentation around that. I think the ability to move beyond a solo income level. We've seen the hybrid business models last year. That trend's going to continue, of ad funded and premium subscriptions. 2 years ago, everyone was chasing after the SVOD model. Now let's see something a little bit more rounded, where we see the ability to do transactional shopping and content and monetization as well. I see that as being a critical growth area, particularly if you start to introduce targeted advertising and people start to be able to find things that match what their needs are according to their viewing trends. And I see the growth of CTV and the ability of CTV to play a major part in enabling that. Once we crack that, and we crack some of the issues around CTV inventory and ad and transparency of ad loads and all of that sort of stuff, I think it should be really interesting, including in, I hate to say it, in the FAST space, which everyone's been talking about, so we won't waste anyone's time and talk about that today. But yes, I think there are huge opportunities for ad inventory across CTV and monetization of content to transform over the next period.
So I agree. I'd probably come down somewhere in between where you're positioning. So I'm bullish about ads on streaming, because I think streamers offer the best of both worlds. They offer high-value professional content that one associates perhaps with traditional television, and they offer the targeting abilities of online and YouTube and other online platforms. What they need to get right, and I'm not sure they have got right at the moment, is the ease of the ad tech and the demand side and supply side platforms on which they trade their ad currency. And obviously, if that by nature of having lots of different streamers becomes fragmented, the beauty of YouTube is, one, it's very big. Two, it attracts a attractive audience, young consumers. Three, it's global. Four, it's very simple to trade and buy advertising on that platform, and it's relatively cheap compared to television. Streaming has to get all of that right in order to grow their market share, and they have a much lower ad load than television, so there's less opportunity to monetize ad slots than in the traditional space.
Yeah, I think the ad load thing is being experimented with. I think there's a lot of tech that's coming into play that we'll see more visibly this year that will experiment with that too, and the ability to transact in situ, either in during the ad breaks, and replace what may have been traditional ad inventory with more interactive inventory, which allows you to purchase. I think we're going to see a lot of those experiments in 2025. And, you know, I personally believe that we've been in a creator economy for 20 years, and I think we're now moving into what I would call an aggregator economy, where the brands that are trusted brands, whether they're aggregated brands, whether it's a YouTube or a pay TV brand, or whether it's a streamer that aggregates content like a Netflix, they will be the ones driving people's choices and abilities. And people, because of there's such an oversupply of such an available content, the question then is, and this is where I come to live sports, because I think that's a really interesting area to focus on. The question there is, how do you build an ecosystem or an infrastructure that really delivers to all touch points of where consumers are viewing content? We know that they're not just going to one platform, obviously, and so there is an opportunity for aggregators of content to capture value from aggregating all different types of platforms where people view content and formats. And so I think we haven't really seen that fully played out. There are people like DAZN who are trying to do it with sports. Obviously, live sports is an area where I think we're going to see a lot of innovation in that. We've seen DAZN take over Foxtel. We've seen Netflix having success in live stream sports, but we're also, I think, it'll be really interesting to see how live stream sports can create much more engaging, fuller ecosystems for sports fans, and make available opportunities also on the commercial side. So on the commercial side, there's some interesting opportunities. We were talking about that too, with the globalization of live sports rights across platforms, which is, for that mid-tier or lesser known leagues to become more international in their fan reach as well. So that creates a monetization model. And we've got some really interesting examples. So the UFC in the States, Ultimate Fighting Champions, are saying that they're going to double their rights revenue in their negotiations with Comcast because of the ability to do these sorts of, because of the competition of live sports. So we're going to see some really interesting, I'd hate to call it battles, but with some interesting recalibration of sports offering and sports rights and monetization of those rights.
It's interesting, though, that the developments we've seen to date, and clearly streamers have gone whole hog into the sports market now, but
inevitably.
But the way in which they're doing business is somewhat traditional. They are DAZN, for example, and the Foxtel deal is part of that, is cherry picking premium rights in certain key markets rather than acting like a global platform. If we think back to Netflix's entry into the market, they completely disrupted the film and TV
Correct.
licensing market.
Correct. And
Now, no one
correct.
has done that for sports, with the possible exception of Apple, who has taken global rights to MLS and the other one, which currently
Yeah.
escapes me. So that is the opportunity to take a sport that is not
Correct.
hugely valuable in single markets and
Formula
build
One.
it into as Sky did with the Premier League, build it into a global property. Formula
Correct.
One would, I was shocked that Netflix and others have not bid on Formula One and let that slip through.
Yeah, the interesting thing about Formula One, though, it was the story Drive to Survive that created the demand, that then created the rights valuation. So you see what I mean by storytelling and live sports and everything coming together. And then if you add on that the whole social layer and all of that that's coming into play, gamification for fans, fandom, esports events, we're going to start to see sports delivered in hopefully I'd like to see the innovation that's going to happen here, and I'm hoping that it will, because the high price of sports rights acquisition means that there has to be a lot of effort to try and monetize and develop high ROIs for those outside of just traditional live sports viewing. So
they're talking about creator economy, sports fandom. I mean, the Jake Paul Tyson fight is obviously the classic or the key example of recent weeks.
yep,
Just in the
absolutely.
US alone, our data suggests that Netflix gained 1.5 million new customers on the back of that fight,
Yep.
let alone other territories, although the US was the biggest. So
Yeah, well, that's an interesting fact in itself. So
hugely impactful. And early indications are that NFL on Christmas Day was also very positive. So those event-based and showcase-based sports are also a huge potential opportunity, which takes us beyond that
and
traditional.
disruptive. Yeah, and disruptive, because just like Netflix disrupted licensing for long form media, we're going to see licensing formats and monetization models be disrupted in live sports. I think that's a natural home for people to test, for companies and streamers and digital platforms to test on that.
And actually, I know we're running out of time, but
Yeah,
it wasn't on our question list, but women's sports was one area where the power of the streaming platforms and globalization of the streaming platforms could really help boost what is still a nascent market in terms of value. And just before Christmas, Netflix took the Women's World Cup.
yeah, women's sport. I'm dying to see what happens in women's sport. It's
Only
going to
for
be
the US.
amazing.
Yeah. Yes, but streamers, I think, have a very potentially a very impactful role to play in that market, because
Absolutely.
it is at its beginnings in terms of realizing the true value of those sports and properties.
And I'm seeing it from a content commerce perspective. The opportunities there are also huge. We haven't seen properly exploited the ability to sort of leverage the influencer value of sports heroes and how they can translate sponsorship and sponsorship brand into revenue opportunities. And so that's a really interesting model. We are running out of time, and we can't not speak about consolidation. We've got Paramount Skydance, we've got the Disney Fubo thing, we've got new partnerships merging, we've got a lot of restructuring likely to happen in the industry, and so it'd be valuable to get your thoughts on that. Personally, I think there's a couple of layers of that. There's consolidation to survive, which is in the legacy media brands, and I think we're going to see more of the Disney Fubos or the DAZN Foxtel type of consolidation, but also what the tech platforms want themselves and who they're going to target in order to have a content pipeline, and if that's where they're going. What's your thoughts on that?
Yeah, I mean, with regard to the tech platforms, it's again a very interesting question, and the answer is I'm not sure. Why have we not seen that sort of big tech traditional media consolidation to date? Really, I mean, Amazon bought MGM, yes, but we both lived through the period of vertical integration
Yeah, it
when
feels a bit like that's about to happen again for the
yes,
same
but
reason.
I'm just
Players are bigger.
surprised. I'm surprised it hasn't already, and that makes me question whether big tech has almost moved beyond that
Good
mindset
point.
to build it themselves.
They
And
are built themselves. They have that in their DNA, so they tend to partner with, Amazon's notorious for partnering with smaller tech innovators or smaller suppliers, and then learning and then deciding to do it themselves. Their DNA is do it ourselves, and we own the world. So, and we don't need
exactly. So that's another sort of unknown and almost a new variable in the market where before we've had traditional plus traditional combining vertically, combining horizontally, depending on the
traditional
market
M&A
pressures
structures
of
won't
the
apply here.
time. And now we're maybe moving beyond that. But I think we
Partly
probably
because
have
they
run
own
out
the
of
data, so they can actually monitor it in a way that wasn't available then.
well, and they have the direct connection to the audience, which
And
was
they have the
often
direct connection to the audience. This is a very powerful sort of situation that we haven't seen before, and that's why it's a different world. It's a very different world.
I think
Going
I
back
think
to TikToks, it's an appropriate time to talk about how where we started. TikTok. What happens if TikTok's not there on Sunday and it goes black?
well, all the indicators are that it will have to shut down in the US, so I suspect it will not be there on Sunday
So
from Sunday.
Red Note, which is another Chinese company, wins, but that doesn't get it very far because presumably the same rationale applies there.
Well,
So where
you
do
would
you
think
think
so.
that's going to go? Any forecasts? I mean, we're finger in the wind here because we have no idea. But I love the fact that in itself is hugely disruptive. So who does it benefit? Are we going to see, Instagram trying to reclaim a slice of the ad revenue it lost to TikTok? I don't know.
Well, absolutely, there'll be a land grab for that
That
opportunity.
huge opportunity, yeah.
But I
Anyway,
think
I'm looking at questions and I'm not seeing any. So obviously, I find them bored everyone's silly or people are enthralled. I'd like to think it was the latter. But anyway, there's so much we could talk about, and it really obviously only skimmed the surface of some of the disruption, but there is structural disruption at the moment, and I think we both agree on that. There's fundamental structuring disruption that we haven't seen the like of for a while, and part of that is centered around the sheer volume and power of techs and the first party ownership of the data and what that means in terms of providing content to consumers, and also the fact that consumers themselves are capturing their entertainment moments across multiple platforms, and that has yet to be fully integrated and consolidated into one offering. Anything to add, Guy, before we say ciao and welcome to 2025 and the ride it's going to be?
No, I need to agree. I mean, every year I feel since I started monitoring this business, I've been saying that it's the biggest change we've ever seen. But this year certainly is up there.
I love it. I'm really looking forward to it. I'm really looking forward to seeing what happens. It's just a little exhausting trying to keep up with it. So good luck, everyone. I hope this has helped craft out what we think are the key themes. And please don't hesitate to reach out if you have any further questions following from today's discussion. We're both on LinkedIn and active in having conversations with you. And thank you for listening.
Thank you
Thank
both.
you.
It was definitely enthralling, and I think that is why you haven't got any questions, because you've answered everything.
I know we haven't
But I
answered. We
think
just highlighted that it's happening. We're
no,
all
but
going to be watching.
it was a fabulous discussion. I think we could have carried on for a lot longer, though, don't you?
Well,
I think
probably
we could
best
have
for
carried
everyone
on.
listening. We didn't.
Normally, I'd say with a glass of wine, but now we could just say with a sip of cough medicine instead.
Sorry
Yeah.
about that. Both Guy and I were doing a duet in coughing.
No, but
Apologies.
you both got through. Thank you very much. It was fascinating.
Thanks for the
And
opportunity, Karen, and thanks to CTAM
No,
Europe. It's always a pleasure to be here.
And
Thank you.
I will follow up with everybody with links and everything in the next day or two.
Thank you.
So
Bye.
let's go. Thank you very much.
Happy New Year,
Speak soon.
everyone. Here's
Thank
to
you.
thrive.
Bye.
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 Bye.